Good morning, good afternoon, good evening. I am Osborne Foreman, your host here today, and today I'm going to be showing you the UK stocks that I bought, as well as the top rising and diving stocks in my portfolio of the week. So without ado, if you like the video, please drop one of these to support the YouTube channel beating that YouTube algorithm. The FTSE 100 is up by 0.92%. Contrary, the FTSE 250 is actually down 0.43% and the S&P 500 is up 0.50%. My portfolio it's done okay this week, considering last week we'd massively underperformed and the week before that we'd massively outperformed. Today it's been quite stagnant, it's been a relaxing week, and my portfolio is actually up by 0.26%. There's a few contributors to this, as some stocks are pushing up, some are declining. I really like the balance I have between the 5 holdings I currently have, and it really represents a nice change. As some of my stocks are really doing well, they're starting to recover. The ones that were at all-time highs are now starting to decline. It's almost created a sort of equilibrium, a balance in the ratio or concentration of my holdings that means that it kind of levels out. I've probably used the word in the wrong context there. But regardless, I think this is okay. Not every week do you need to be outperforming the markets. After all, this is very much a long-term game. And in about 4 weeks' time, I'm probably going to forget how well I did this week anyway. So it's important to not be too impacted by it. Daily volatility and even the swings in a month-long period can certainly impact some investors, going as far to say that some investors actually have their mood impacted by it. Their shares might have declined by 10% and suddenly that's ruined their day. I strongly believe that you should not allow this to happen to yourself. I do believe this is out of the control of people, and so it really depends on how you were born and how you really approach this and whether you put emotion into investing. But I at least would like to encourage, if at all possible, that you try to remove emotions from investing. Not only could this make you underperform, but it also means that sometimes you could be blinded. You might be emotionally investing into a stock that is actually, or was a good stock, but has slowly deteriorated over the last few years. And despite the countless red flags saying, look, there's much more debt, they're starting to lose their profits or their growth is slowing down, you might be emotionally attached to the stock and thus may be subject to a correction or just underperforming over that long-term period. Regardless, the top rising stock in my portfolio this week is actually my biggest holding, Boohoo. They are up by 3.76%. And I suspect, that this is over anticipation of results which are due on the 15th of June or next week. These results are likely going to change the pattern or the swing of the stock. Typically with Boohoo, it's in an anticipation of results that we see either a climb or a decline. Not last time, but the results before then, it was always, oh look, Boohoo stock's going to do really well, so in anticipation of these results, the shares are going to hype up, and usually they'd have the results and then they'd either stagnate or decline. This time, I don't know if this will happen because this is the first quarter of 2021, so this trading update is a big move. Considering the last year, majority of it was in lockdowns, this had meant that Boohoo had the natural advantage. They obviously could sell products where the likes of Primark could not. And so we really want to see that Boohoo are continuing to grow, even if they have slightly slowed down. And the main thing is if they're beating their expectations, because their guidance, and I can't remember off the top of my head, I believe it was between 28 to 32% revenue growth for 2021. And I think that was quite a conservative growth estimate. And I believe that they can very much outdo this, especially as the economy reopens. People are going out more because they've been stuck in their homes all the time. The sun's out, and let's see, we can't really travel abroad. So domestically, I imagine the UK is going to be doing quite well. At least from what I've seen from working in a pub, and I've been working many days of the week, I've seen a lot more people coming out. Even I've been going out drinking, whereas usually I would not. These people seem to have trendy clothing. At least when I've been looking at some of the people, that's really creepy. Not quite what I meant, but at least as customers have been walking around, I'd noticed that there was a trend in fashion, and it seemed to be following the same principles that Boohoo have as they target that 16 to 30-year-old trend. Although anecdotally, on the contrary, I've tried looking at some of the products that they offer. I looked at the likes of Boohoo Man. I've even looked at one of their new acquisitions, which I believe is Burton, and I found that it wasn't really towards my style. despite investing in this stock, I may not wear clothes of this brand. Although I would like to buy some to see really how the quality compares to the likes of Primark, which I do have experience with because the only shirts I wear in these videos are from Primark. Regardless, I think Boohoo will do better than expectations, but then the market may be pricing that in already, and so we do need to be a little bit cautious about it. Over the longer term, no doubt, I think Boohoo is going to smash it and they're going to do very well. The short-term volatility could still be a question, and who knows, these results may spark further ESG complaints, whereas people might be going, well, what about the slave labour? What about the factories? What are you doing about that? This could be followed by a lot of media articles publishing, and that could lead to a negative downtrend in the stock. Who knows, I'm only speculating, but what I can say is that I still hold 2,541 shares at an average price of around £2.49 each, and I will continue to hold, and I will see how they do on this next trading update. And if you haven't already signed up to Freetrade, my stockbroker, on the side of the screen, then click that link in the description down below and you can get a free share worth up to £200 when you sign up using that link in the description. The top diver in the portfolio this week was maybe surprising, as this has been a stock that had been outperforming the rest. This stock is Ashtead Group and shares are down 4.27%. Once more, they've got their results on the exact same day as Boohoo, 15th of June, but this time we can see more of a negative trend. Investors may believe that results are going to be worse than anticipated. This has led to a slight decline. After all, in the last year, Ashtead Group has increased by nearly 100%, and that's a fantastic run-up, and likely they may see a big retracement. I'm going to try and up my stop-loss limit. Currently it was set at £44.20, which represented a 15% decline from £54. I'm going to up this to around £46 per share. I don't believe Ashtead Group will drop that far, but on the off chance that they do, then it will sell out my position and I can reinvest this capital elsewhere. I do believe they're a good company, long-term leases, and they're well positioned. They've got a great balance sheet and they are steadily reducing it. So I don't believe Ashtead Group is a bad investment, but the current valuation, it may present a lower upside potential over the medium term, which I would say is around 3 to 5 years. This is one that will always be on my watch list, but for the time being, if for instance my stop loss limit is triggered, then at which point I will likely reinvest and deploy that capital elsewhere, and then I would have 4 high conviction stocks, and perhaps my returns in the portfolio may benefit from it, although Ashtead Group is my top performer. I only hold 40 shares of this stock, but shares are up around 95%, and I initially bought this as a complete fluke. I saw the dividend history, I'd seen that they had outperformed Amazon in the last decade, I had seen all these good metrics for them, I'd seen their balance sheet, their financial growth in the last 10 years, and so I did buy Ashtead Group on that premise. But would I buy them now? And that's a question I'm not entirely sure of. Regardless, if this continues to dip, my stop loss will be triggered. If it doesn't, then I'm happy to stay invested and benefit from the future returns. But I will be watching carefully for the results next week, and next week will likely be a big week in my portfolio. Ashtead Group also provides a unique aspect of really giving us a detailed analysis of how the UK construction markets are doing, because their results will likely replicate that of how the entire markets and industries are going. Another notable faller in the portfolio is the likes of Games Workshop. Shares have declined by 4.18%, only trailing Ashtead Group by 0.09%. And there's actually little to no news on this. I don't know why shares of Games Workshop are declining. However, I can speculate that because in the last month they have had a strong run-up, the shares are simply cooling off, consolidating, and likely investors have gotten over a little bit of euphoria. I'm hopeful, and if shares do continue to decline, I'm going to up my range. I think I will likely start buying more shares at around £105 per share, which is 5% higher than my last target. This is because I do believe in the long-term prospects of the company. I've said this countless times, but their intellectual property of the likes of Warhammer being constantly developed by the Black Library can easily be reproduced as royalties in further video games, which increase their bottom line of earnings because they aren't developing these video games, and so the royalties pretty much go entirely to earnings after tax. And then also, they could use this intellectual property to move into TV series, animated shorts. This could then advance into more well-known TV series, like for instance a Netflix original, let's say, and then even onto some films. I do think there's a lot of potential. The story is very encompassing, and they have they have multiple different universes that they could certainly take advantage of, and a dedicated fan base. And so I'm very enthusiastic about the future, and especially with the likes of Total War Warhammer 3 coming out, they are actually exploring an area that really hasn't been mentioned much at all in the lore before. And so these armies that they create in this new area, the cafe by the way, this could mean that if this is popular in the video game, that they could create army sets, which would be the miniature retail figures, and then they could sell that. And at which point they've, for instance, doubled up and they've made more money. I'm also more interested to see, and I might go into my local Games Workshop shop just to see how they are doing. I would like to see that now that we are on now that perhaps the pandemic is starting to fade, at least in the country, as our vaccinations are increasing, I would like to see how they are coping, whether there are big communities or whether it's quite quiet. I'm very much interested on that, but all I know is that I hold 69 shares of GAW, and I will continue holding for the long term. Team17 shares had also declined this week, but only by 1.18%. This has been a stagnant share in the last month or so. Well, I say stagnant, it's been a volatile but trading sideways share, and it's likely over the sentiment in the industry. It might be the fact that Codemasters bought by EA was a big emphasis or sentiment boost for this industry, and now that it's been a while, the valuations could be lowering, and this could be a natural area for Team17 to be sat for a while. They also had their AGM, which I didn't really understand much about because there was one RNS notification which told me to go to the Team17Group.com site, and it didn't represent any further information. They mentioned something about passing of hands and that everything that was announced in the AGM had been passed, but I really don't understand this, and that is an area that I need to learn more about. I'm not going to lie to you. Why would I pretend that I can understand something that I don't? I'm not here on YouTube for an ego boost, but rather my motive on YouTube is to not only develop my own skills in investing, but also build up a passive income stream and potentially make a career for the future. So if you do know anything about the likes of Team17, what was actually mentioned in their AGM, and if there is anything of important note to know, then please tell me. Regardless, prior to this, I'd actually bought more shares of Team17. I've got my bull case for the company, and that's because they are an arcade gaming business, and that they've got potential due to the fact that they could be family-friendly games, but they've also got potential with the likes of Worms and other games in the series to have an esports sector. And with this, esports is a very popular industry that is growing rapidly. If they had their exposure with their arcade games, these could be not only interesting to watch, but very skillful games. I would compare it to the likes of chess. Chess is quite entertaining when you watch two grandmasters play each other. Now imagine a similar thing with two very high-ranked Worms players fighting it out. There are many different game modes that could be played, and I imagine that they could use some of their cash position to offer cash prizes, and it really wouldn't be too much. The main question is whether the management decide to do that, and honestly, I don't know the answer to this. I'm happy with what the management have done in the past. Their recent acquisition of Golf With Your Friends, I think, was an excellent move. It's a very popular game, and it's one that can be continued to be developed, and not only develop the game, but that game can also mix with their other brands because they can use certain arenas, like they've got their Worms arena or golf course, which gives more of an attention to the Worms series. So I bought 18 more shares on the dip. Not only am I lowering my average cost, which is definitely below by around 10%, I'm hopeful that over the longer term, this stock will continue to do well, great cash generation, great earnings and revenue growth, that over that longer term period, that my averaging down now and buying with dip will benefit myself over the longer term period. And then the other one, Argo Blockchain, is up by 1.86%. There was one fantastic day of the week in which shares had climbed massively, although it was quickly retraced, and this is what's likely going to happen for a while now. It would be interesting to see if there will be an update on the NASDAQ uplisting from the OTCQX markets, but for now I'm going to sit patiently. If Bitcoin drops, no doubt it will impact the likes of Argo Blockchain's share price, and I'll use that to hopefully buy more shares, increase the size of the position so that I may benefit in the longer term future, in which I do believe they will be listed on the NASDAQ. I do believe that their Texas facility will be doing very well and have a lot more Bitcoin that they're mining per month, and I do believe that their HODL is going to increase and their mining margins are still more competitive than the others in the industry, and so they still represent those advantages that I'd like to take a note of, especially with the idea that they are a North American Bitcoin mining company, and the only real threats in the industry are towards the Chinese miners, as China starts to put some regulations in place, but this could be a scare tactic. If you're interested in how much gains or profits I made in 14 months of investing in the stock market using stock picking and nothing else, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day, evening, afternoon. Have a fantastic week.